Is up, YouTube? I'm back with another video, and today I'm gonna be going over how to trade with Fibonacci retracement. So I'm gonna be going over how I use fibs to catch some of these setups. So without further ado, let's get started. So first things first, what are fibs? Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur. So this is the standard definition, but simply Fibonacci retracements are used to pretty much indicate where price will pull back to. So let's say we have a big movement that buys up. What fibs are good for? Fibs are good for predicting where the market is likely to pull back and continue going up. So fibs will indicate, okay, this is a good price point, depending on your key fib levels. So even if it's vice versa for selling, if you have a big movement, as we know, the market can't just push up one way forever or push up one way forever. That's impossible. Market needs to, pull back or do a retracement. So what fibs are good for are finding or predicting where those retracements are most likely going to happen at, and potentially you get a movement off of a key fib level. You start seeing signs of, price continuing in that direction. Simply for selling, typically fibs are good for predicting where the next lower high is going to be. And if you're buying, fibs are good for predicting where the next higher low will be. And as we know, we want to look for, selling opportunities at lower highs, not on lower lows. We want to look for lower highs for selling opportunities, and for buying opportunities, we want to look to get in for buys on higher lows. All right. So those are, fibs. So when to use fibs? Fibs are best used in trending markets. So you don't want to have a consolidated market when you're using fibs. Why? Because market is just bouncing up and down, up and down. So it's not creating any higher highs, higher lows, lower highs, lower lows. It's not creating any of that. So it's virtually not possible to, draw your fib in a consolidated market. So we want to have trending markets. That way we're able to get in on these higher lows and then lower highs for selling. So you want to make sure you're in a trending market. Secondly, you could look for these fib setups. You want to use the fibs in, let's say you have a break of structure. Let me go here. So let's say you have a break of structure of a uptrend. You could also use fibs. Let's say something like this. So you see how the market came below the previous higher low. This is a break of structure. So we know the market can't just go down forever. The market has to pull back, and it could pull back to one of the key fib levels. You enter off of this, trend reversal / break of structure. You're able to write this trend for a long period of time, all while using the Fibonacci retracement alongside with, market structure. So you mix market structure with these fib setups, your trading game will drastically increase, and you'll become a better trader. Just understanding the chart, understanding movement, and then adding the fibs to your game is really, really, really beneficial. So you could use fibs for a break of structure of an uptrend as well as a downtrend. It's essentially the same thing, broke structure. And this is typically my favorite setup. This is what I really look for. So I look for like a break and then a pullback to key fib level, which I'm gonna go over soon. And then I want to see signs of, price showing me signs that it's gonna either buy up or sell, depending on what my bias is, or my bias or what I'm looking for. So those are when you could use fibs. You could also use fibs when there's a break of resistance and support. So let's say you're at a support area. So you're at a support area, and let's say price does this, breaks above. This break above most likely will retest. Not always, but most likely it will retest. You could draw your fib level to see exactly where it could potentially buy back up from and enter with a sniper entry potentially. So this will be an incident where you could use your fibs. Same as selling. Let's say you have something like this. You're at support and support is finally broken. You could draw your fib from here to here. We're going to get into that. And then catch your entry off of either a key fib level. And then catch this sell. So fibs are very beneficial. So how to draw your fibs. So the key thing that you need to remember on when to draw your fibs is you need to remember, let's say we're looking for buys. You want to draw your fib from the previous, let me do it like this. Draw uptrend. All right. So you want to draw your fib from the previous higher low. So you drag it from the bottom. And then once you see the market starts to show signs that it's pulling back, then you want to draw your fib from the previous higher low to the current higher high. And then it'll give you your fib level. You'll see on TradingView when we get there in a sec. So essentially you're just putting your fib from the bottom to the top. And then selling, as we know, it's vice versa. So we know that for selling, you want to drag it from the top to the bottom. So if we're selling something, I want to draw my fib from the previous lower high to the current lower low. And then my fib level will be around here. Then I potentially sell. So that just, we'll go over it more once we get on TradingView. All right, so now let's talk about the key fib levels. So here are my personal key fib levels. Everyone has their own, but these are the levels that really work for me and the levels that give me the best results. So my key fibs levels include the 61.8, 78.6, and 88.6, which are my sniper entries. And as you'll see in some of the examples, you'll see that it just leaves a pin at the 88 and just immediately reverses and buys up, or depending sells, All right, so yeah, but the main two key fib levels that I like to really look at are the 78 and the 88. The 61.8 could play out. However, price typically comes below the 61.8. So the best fib levels to me are the 78 and 88. However, the 61 is an exception. If you want to use that, you could use that. And then my TPs are the negative 27.8 and negative 61.8. And these are what I use to target my, use as take profits for some of these setups. So here are some examples of a buying setup. So here you'll see that we have a low here and we have a high, and I'm looking for buys. So I drew my fib from here, I drew my fib from here to the high here. Some people draw their fibs from body to body. However, I like to use the wicks. That's me personally. It's up to you, but me, I like to use the wicks. So I drew my fib from the bottom to the top, and look, it hit the 78 and it almost hit the 88, but it hit the 78, started showing wick rejections to the bottom, gave me this nice candlestick pattern, and I was able to enter once the candlestick closed. And as you can see, this really shot up and it hit my TP1 and TP2 off of an easy setup, just looking at market structure alongside with the fibs. Here's another example of a buying setup with fibs. So here, as you can see, we get this strong push up, right? We get this strong push up, so we could expect a pullback or a retracement to a key fib level. So that's exactly what I got here. So if you see, this is a low, this is a high, and also look, we broke structure. We were on a downtrend. Market broke above, retested, continue going up. So I'm expecting buys because my analysis, my technical analysis is showing me that this is a trend reversal. We broke structure, so we could expect buys. And that's exactly what happened. So all I had to do was just wait until I seen a low, draw my fib from the low to the high, wait for price to come to my key fib level, and I'm waiting for wick rejection. My entry confirmation, I'll probably do a separate video, but essentially I'm just looking for wick rejections. And I got these two strong wicks rejection and got my entry here and was able to write this trade up all the way to TP2. So setups are really easy. It's all about repetition and putting in that work. Back testing, you could back test this and see how many times it works for you, and then try to apply it on your, I say start with demo first and then work your way towards live. So this setup has really helped me with my trading. So here is a selling example. So notice that we're in selling conditions. We're in a downtrend. So market is trending down. So with that being said, I know that my fibs will work because we're in trending environments. And I know that I'm looking for sales potentially because we're trending downwards. We're in a downtrend. So all I do is wait for a lower high to form, which is right here. I wait for a lower high to form, and I wait for a lower low to form, which is right here. So my lower low is here, my lower high is here. So I draw my fib from the top to the bottom and wait for price to come to my key fib levels. As you see, it came up to the 78 key fib level. Started seeing some resistance forming. Got in around here. Catch this wholesale. Even here, you could have held. Catch this wholesale. And pretty much you're writing the trend once you get in. That's one thing I like about the fibs. It really helps you ride the wave of the trend. So if you catch an entry on a buy position on an uptrend, you could hold that trade and catch more and more pips. And you're not risking a lot too. Because if you look here, let's say that off the 78, you get a smaller stop loss. You could put your stop loss right above here. Now, if I entered at the 61 or the 62 fib level, my stop loss will be much higher because I like to put my stop above structure. So I put my stop above the previous lower high if I'm selling. All right. So let's look at the next example right here. Next example. So as you see, we're still trending downwards. So this example is just like the other example, but it's showing how you could add entries. So if you look here, you see how I caught this first entry here. Look what happened here. Another lower high form. Hold on, let me erase this so you guys can see. Another lower high formed here. And look here, a lower low. What are we expecting? A pullback, retracement. retracement to a potential key fib level. So I draw my fib from the top to the bottom to potentially catch this setup. Let's see what happens. So it hit the 0.78 fib level, or 78 fib. So, and it wicked it too. So this was a strong wick rejection. Price started to go down. So let's say I got this first entry here and the second entry. And I believe both of these went for about 200 pips each. So that's 400 pips off of 2 entries with relatively tight stop loss. So just using fibs and your knowledge on market structure, you could really run up the market and start, developing, getting better as a trader, becoming an elite trader just off of this setup alone. So this setup really changed my game personally. So hope you guys are truly understood this setup. Let me go trading view to show you a live example that's currently I'm looking at right now. So this is Euro USD. So Euro USD, you could see that, oops, sorry about that. So Euro USD, you could see that, let me try to zoom out. All right. So you can see that we had this period of consolidation here. All this is consolidation. So I couldn't really draw my fib within here. However, if you look, we get this strong bullish movement, buying pressure, and it broke above, the consolidation that we had, broke above resistance. So what I'm expecting is a pullback to a key fib level, because as you know, if we get a strong push up, you can expect a pullback or a retracement to continue going up. So here, on Euro USD, we got that retracement to the 70.78 fib level, and we're wicking at the bottom. On the 1 hour, we have a double bottom W formation, and we're already in profit, a couple pips. So this is potentially a nice setup and a nice example of how to use fibs. So trust me, the fibs are really, they really give you banger setups, and it makes you more patient. You're not rushing into setups. When I first started trading, I used to just rush into trades. I didn't really have any structure to my trading strategy. I'll just trade anything I see. But with the fibs, you know not to trade unless it's in your, point of interest or area of interest, which is the 78 fib level or 88 fib, sometimes 62 fib. So here are my fib levels. I almost forgot to show you guys. So hold on. All right, so let me scroll down. So screenshot this so that you can have the same fib settings that I have. So these are the fib settings that I use. All right. So yeah. This really changed my game, and hopefully it changes your game as well and help you improve as a trader. If you have any questions, just leave some comments below, and I'll probably do another part 2 towards this videos, going over more examples and going over more on the entry side of things. But yeah, I'm looking at EU long potentially. And also one more thing, if you look at DXY, the dollar index, you see that here I drew my fib. I drew my fib from here. I think it was on the daily. Must have been on the daily. Yeah. So here on the daily, I drew my fib. So I seen that we had a break of structure, and I drew my fib from here to this low. Where was it? I believe it was this low. And it hit my 78 fib level, started going down, and I'm potentially looking for DXY to continue going down, which is why I got Euro USD potentially buying. So we'll see what the market has. Hope you guys have a great trading week, and I'll see you guys in the next video. I'm out.